Hey everyone, Israel coming here from Vintageducation.com. And on today's video, we're going to be breaking down the live Forex charts. If this is your first time here, what we do on this channel is we help you learn how to make Forex profits. That's the only thing we focus on this Forex channel. So if you're joining us live, or if you're joining us later on a replay or something like that, thanks for tuning in. We're going to be breaking down some of the different currency markets live in real time, giving you a heads up about what to actually do in regards to the market. As you can basically see, you should be able to hear me properly. You should be able to see the charts correctly and everything as well. We're going to basically talk about the 400 pip drop, which we had kind of set up in previous live streams. We had basically set you up to understand why the market was actually going to do what it's going to do. We're going to talk about that in today's live stream, and also talk about the aftermath and what's actually going to happen next. So if you can hear me properly, if you can see the charts on screen, literally let me know in the comment section and we'll basically get started basically right now. So first things first, you should be able to see this is the chart. This is the euro yen. This is the currency here in question. Now, for those of you who again are new, you won't necessarily know how we do things here. What we basically do is this all starts from the weekend in regards to the Forex markets, in regards to how we basically analyze the markets. So what I've actually gone and done is I've linked down in the description box for you to watch after the video we did, the live stream we did on the weekend, which kind of was the latest kind of like overall kind of like bird's eye view setup of like trade opportunities. Because what we do is on the weekend we basically break down the charts and we say, okay, cool, while the market's closed, we're going to basically be making unemotional, very logical trade analysis, trade decisions. And we do that because in those scenarios the market's not moving, it's not ticking up and down, making us second guess ourselves or third guess ourselves and fourth guess ourselves, etc. So we do it when the market's closed, so there's no emotion, it's a straight logic. What do we think? Then when it comes to actually real time, we basically turn around and say, okay, cool, this is the way we think the market's going, this is where we likely think the market's going to drop from or rise from. We're looking for opportunities in those particular situations. So let's unpack all of this in more detail. What you can see now is the euro yen on the daily view. Now you should be able to see quite clearly we've had two lines on, one here across. I know that's a bit wonky, let me do that again. So we've had one line here going all the way across, we've had one line here all the way across the bottom. Now what we basically ascertained is we basically said to ourselves that, look, we're looking at the markets and price has basically not been able to break this particular region right here. Okay, this region right here. So as price was pushing up, although we expected the market to move down a little quicker, what basically happened is price decided to continue going forward and upwards. So as price continued to go up, we were basically highlighting and saying, okay, cool, if price is basically going to continue moving up, where is price going to stop? We ascertain and say, look, we don't move the market, we don't manipulate the market, we are just retail traders. And for those who know what a retail trader is, it's just basically someone who trades their own money, right, from home, etc. So we have to use the information we have from our vantage point to kind of ascertain like what's going on. So one of the things I always say to do is when you're looking at the chart, specifically looking at technical analysis basically just means looking at the charts. You want to get familiar at doing this, looking this way and seeing what price did previously, because a lot of the time price is going to do what it did previously. Okay, so we looked to the left and we said, okay, cool, this area right here was a key area of interest where we believed that the market would actually drop from. Okay, because why? Because it's done that before. So when price is actually pushing up here, we've got this line on, and right in this particular region we're saying, okay, cool, we've got a question mark. What is price going to do? Is price going to bounce through and keep going? If that's the case, then we'll obviously look for buy positions, okay, and we'll buy. But if price isn't going to do that and price is basically going to stop here, then we wouldn't be surprised. And not only are we not going to be surprised if price stops here and basically turns down, we actually can be prepared because we're doing this stuff in advance, etc. Okay, now if anything doesn't make sense at any point during today's live show, literally you can leave a comment, I'll try and answer those to the best of my ability. One thing I will say as well, I guess it's a good segue to say this is not financial advice, this is my own personal opinion. These are decisions I make for myself and for my own trading situation. It's not a guarantee that you're going to make money. It's not a guarantee you're going to lose money. Okay, you have to be adult about this yourself and make your own decisions. Okay, this is the legal disclaimer. All right, so once we highlight this area, okay, the 121.10 region, right, you need to understand that although we're talking about this after the fact now, go back and watch the previous live streams. They're in the description box. Okay, you can just check some of the previous live streams as well on our channel. You need to understand that price looked like this at the time. Price would look something similar to this, and before price is getting there, we're saying, okay, cool, this is the kind of area we think the market's going to go to. So as the market hits that region, you're prepared. Now subsequently, you can see what's happened since. Price has sold off. Now price complete day after day after day, red candle after red candle after red candle. For those of you who don't know what the colors are, you can put these to any colors, but generally red is going to be a candle that moved down. Okay, green is generally going to be the candle that moves up, and you can see that day after day price has been moving down. Where did it move to? Not a surprise that it moved all the way back down to this particular region here. Excuse me, the 117 region. Now I remember initially I talked about, look, I'm going to say the 117.50 as like a more solidified level, because within all of this price action in this particular region, price action is just basically buying and selling. Price was continuing to bounce off this particular region. It didn't always get down to this region. So overall, we are confident that the market would get to this region, but we knew if price started moving down, it's likely that it would actually get to this particular region. And it basically did both, which is actually a good thing ultimately anyway. So why am I doing this in this way? I'm doing it in this way so you can basically see what's happening first and foremost from a bird's eye view. Then we basically go down to the lower time frame view to basically give ourselves the best opportunity. So as we go down, this is a daily chart. Every candle here, every piece of activity here is one day. We now start going down, and this is what we've been doing over the last couple of weeks, basically just breaking charts down like this and giving you good solid opportunities for the market to move down. Now the fact of the matter is, give me 2 seconds. The fact of the matter is, when you look at what's actually been happening, it's not a surprise that price has actually been able to do this. This is a 4-hour view, and you can see these yellow areas here. These are the areas we talked about to start the week on the weekend, and we're saying, okay, cool, let's see what price does. Now as we go down, you can see that price, this is even just a better view, going from a daily to a 4-hour view. You can see that price gradually moved down just in a series of waves. Okay, nothing spectacular, just what you'd kind of expect. Now let's go down even lower so you can see this in even better context. So now you can notice that the start of the week, and again, go back to the weekend video, you'll see us putting these regions on basically. But you can see that the market opened, okay, and then what did price do? Now price came into this kind of area and then subsequently moved down. Now it's interesting, and this is what I need you to understand, okay? It's like, unless you were actually on live with me, or unless you watched the replay of the live show before these events happened, it almost looks like I came in and drew these things after the fact. But what you'll realize if you go back and watch those live streams after this live stream is that these things were put on previously. So it's not a surprise to me that price moved down this kind of area. Let's go to a 15-minute or 30 minutes to start. But what I need you to understand is, what was I doing? All I did, and all I recommend or suggest anyone else to do, or I suggest you think like this, is all what I said previously. This hadn't happened yet, and I just said, look, where's price dropped from previously? I saw this area right here. I saw this area right here, and I said, you know what? It's not just where does it move. It has to look a certain way. We talk about this in depth in our free on-demand training, which basically shows you specifically how we trade. There's a link to watch that anytime you like in the description box below. You can watch it, register, watch it on demand after this live stream. Very powerful. It tells you like the nuance of everything that's actually going on here. But we're just looking to the left. That's all you do. If you're just basic technical analysis. Look to the left. It doesn't guarantee anything. So I don't want you to think that I'm like some magician or some guru and I always get the things right. I don't. This is why, because we don't always get things right, we want to put ourselves in a position where the risk that we put on our trades is still minimal. Because although we might be confident in these things, again, like I said previously in today's live show, we don't move the market. So it's not for us to say, yes, this is what's going to happen just for a fact. Okay. If we had the money to move the market down like this, then obviously I could be a lot more confident and say, you know what, the market is moving down from here. Okay. From these particular regions. But if I don't, I'm a retail trader, maybe just like you, most likely, then we can only just kind of scout ahead, not put emotion into this, be logical about this and see where it looks like the market's going to go down from, okay, or up from, depending on what it's doing. Now, this is one we obviously talked about going down. Now, I've talked about entries previously last week on a few live streams, because for those of you who are thinking, okay, cool, like, help me out in regards to like where the, like how the market's moving, like we can understand to a certain degree how you're picking these areas where you might think the market might continue in the direction you're going, but like how do we enter the market in those particular regions? We did a few live streams last week. You can go back and watch those. That will give you more detail, but also obviously again the free on-demand training in the description box will show you exactly how to do that. And also obviously we've got training programs or courses you can look into as well, which talk about all this stuff in more detail, which are obviously paid. Okay, so just bear that in mind. Now, when we continue looking at this, let's talk about this a bit further. And I'll just say this as well. Obviously, the charts I'm using for those of you interested are TradingView. You can get a free trial for it in the description box and use it. It'll look exactly the same way mine does. You can do all of these boxes, you can do all these lines, etc., etc., etc. Okay, just for the record. Now, what we're doing here is we're using multiple time frames. We did a video about the best time frame to trade. It's in the description box. You can watch it after. But all of the things you see when we do all of this stuff together, it puts all the pieces together, and you can see how we create a solid trading plan, okay, a trading package to put together. Now, as we continue looking at this stuff, yes, price moved down from this particular region, right? But one thing you need to understand is that I'm probably certain you're probably going to be like, okay, cool. Maybe you didn't watch the weekend live stream. Maybe you didn't watch the live stream from the first day of the trading week this week. Okay, cool. Maybe you didn't see this opportunity. Maybe you missed this opportunity, right? Now, there's two things you can do when you miss a trade. Well, there's multiple things you can do when you miss a trade, but two things specifically you can do based on what I'm basically about to kind of present now. Okay, so you missed this trade opportunity, fine. You're asleep, you missed it, you were scared, etc., whatever it is. Whatever the scenario is, the trade's gone. Okay, I'm not talking about psychology now. I'm just talking about from a taking a trade perspective. What do? The first thing you can do is you can say, I'm just going to gamble. Okay, let's just call it G. I'm going to gamble. And what I mean by that is that's basically you've missed the opportunity. Now you're just trying to sell just at any place with emotion. This right here, or should I say these right here, are the potential logical decisions. Okay, making up new things here on the spot. PLD, potential logical decisions. These are the decisions we did not in real time, before real time. This is what we think the market's going to do. Okay, cool. These are not being greedy. Okay, these are just, okay, this is what we think the market's going to do, right? When we start just, okay, now we missed it, we're feeling guilty, like we're missing, this is a trade we could have been on, etc. We start taking trades in these particular kind of regions. This is what we call now greed, because we're saying, look, we missed the opportunity. Those profits that are being realized for people out there that were prepared, etc., whatever it is, people that are making the money, I want some of them. Now you start jumping on. That's not what you do. We mentioned this again in the live stream we talked about last week about entry. One thing you want to see when the market's pushing up or pushing down, if you aren't on the trade, what you need to do is you need to start looking for these in this scenario. Okay. You need to start looking for opposing candles, because what opposing candles are going to start to suggest to you is, I said this so many times last week, but those of you who are more regulars, you should know, and you should be posting it in the comment section, people are taking profits. So the market never moves in one direction for too long, because as people are selling the market down here, people decide they want to take profits, they want to close out, which is smart, which is logical. This is why I don't understand, I say it all the time, why people don't take profits on their trade, because part of the whole thing is about making profits. So that's what you need to focus on, right? This is what I started the live show talking about. The only thing we focus on this channel is how you can make profits trading the Forex markets and the different mechanisms and vehicles you can do to help you get there. Okay, it's just that simple. So the market's moving down in this case. We've scouted it out. I'll just give you another bird's eye view of this so you can understand why the market's moving down. We'll go to a higher time frame and you can see from a weekly perspective, okay, going back to before 2018, price has been moving down, right? Okay, that's quite clear to see. So that's the way we want to trade. Whenever the opportunity presents itself to move down, we want to basically trade alongside with it. Now this is actually really interesting as well. Okay, we'll maybe pick this up before we finish today, where price this 117 region, but just bear that in mind. This is why we're going long, we're going short, sorry, okay, selling. Excuse me. So let's go back down. Let's go to a 15 now. Excuse me. And let's do this. So this is an even better view now of what we were just talking about. So price moves down, cool. For whatever reason, you miss it. You don't start just trying to take trades just as price is rocketing down, okay, unless it makes sense. But after a drop, after an increase, there's going to be like a decent return, a decent retracement, they call it. It's basically where price basically starts going back against what it was doing. Some of these green candles in here, you can call them like mini ones, but generally what's going to happen is you're going to have a situation like this, here, where price is going to start to put consecutive opposing candles. And when that happens, that's the opportunity. Okay. And what you start doing in those scenarios is you start plotting. Okay. Where's the top? This is moving down, so we're looking for a top. Where's the top? Where's the top? Where's the top? Now notice, look. So all you do is, a simple way to do this is you just keep looking to the left. Okay. As price is moving down, we start to see multiple opposing candles. Okay, cool. Is this the top? We put a line on. You just wait. Okay. Price pushed down, it tests it, pushed up a little bit. Okay, cool. It's not the top. Top. Is it the top? Price pushed down, tries to test it, pushes up a little bit higher. Not the top. Price pushes down quite a significant amount, about 40-50 pips. Potentially you could get a trade in there. Price comes back up, it tops it again, tops it again. Now what you need to understand is, for example, is if you're taking trade opportunities, like don't let a losing trade stop you from getting on a winning trade. That's what I need you to understand. But the fact of the matter is, as all of this stuff is happening in real time, the worst thing that can happen to you is, if you're not in a trade, the worst thing that can happen to you is you miss a trade. So I want you to understand is, don't be afraid of missing trade opportunities, because there will always be another trade opportunity. But your account isn't always going to be there available to trade with if you continue to cause blunders in your trading account, all right? So as this is all happening, you're just looking, where's the top? You can go down to a lower time frame and get a better view, but you're just looking for tops and you're looking for a position. You're looking for, okay, cool, we're ready to go down now. Now, you can see price is trying to find where the area is. Where's it going to top? Where's it going to top? Eventually, it tumbles down and keeps going, right? Now, let's say, for example, you missed this. You missed this example. You missed this as well. Okay? It happens. People miss trades. What do? Do you start just trying to sell here? No, because where's your stop loss going to go? The market has kind of proved to you that the top right now is right here. So logically, if you're just going to go religiously by price action, your stop loss would have to really just go up here somewhere, like above the high, right? So look at the risk. You take a trade from here. It's a lot of risk. What about here or here? The risk is getting bigger, right? What about here? The risk is getting bigger. And notice that in this whole movement from where we are now to the pretty much the bottom, the price didn't really pull back. It didn't really go back anywhere. So like there wasn't really a logical place for you to say, okay, cool, this is basically where my stop loss is going to go, etc. So you have to bear that in mind when you're doing that, and you have to just say, okay, cool. If you miss this opportunity, you potentially miss this opportunity, you wait. That's it. Okay. You just wait. But no matter what, you have to remember, this is the area we've highlighted in advance where we expect price to basically have some issues. What do we say? We said 117.50 as well, right? And look what happened at 117.50 right in here. Let me do that again. 117.50 is about here. Surprise, surprise. Okay. Because we said previously, let's do this. From the higher time frame, 150 looked like an area where price was bouncing from. Okay. So just bear that in mind. But is it a surprise that price pushed up in that region? No, it's not. And what does that do? That provides another potential opportunity, because look, all of the price action from this last potential leg, which was what? From 119, okay, to 117.50, right? Between 117.60, 117.40, which is 117.50. So that's 150 pips, right? 150 pip down. And then price pushes back, and it's the exact same thing. You're looking for an opportunity to basically go down. Notice this. This is why I just mentioned all of this. Look, price went straight down. This is the first area where you've got multiple green candles in here. So the exact same thing we did up here, right? The same thing we'll do up here. We'll say we do down here, sorry. Now look, let me highlight this. So when we go down, you can have a better view of this. So look, let's highlight this area first. This is how you can do your analysis in advance, and the markets can drop 400 pips and you can have a piece of it. If you're not trading long term, then maybe you didn't get the whole 400 pips. But if you're trading on the intraday, the way I kind of trade, maybe you got 50 pips one day, 50 pips another day. Maybe you got 150 pips in the week. But this is what you do across multiple different currencies and get opportunities like this. Okay. All right. So the reason I'm doing this is because I want us to go to a lower time frame so you can see what does this look like. Okay. Go this way. Okay. So this is the activity. This is that same activity that we just highlighted. And we talked about this last week on a couple of live streams when we went down to even lower time frames. We went down to like a 3 minute. And I was basically saying, look, these are the kind of things you're looking for, tops, right? So price comes into it and they say, okay, cool, where's the top? Price topped out here first, and you're watching in real time. What's happening? What's happening? Okay, cool. A lot of sideways price action. Price doesn't want to top out here. Then all of a sudden, price tops out. Okay, cool. Is this the new top? So if I'm going to take a trade, if price is not going to go higher, my stop loss can go above here, right? Because we have the momentum. We know what way the momentum's going. Momentum's going this way. So it's all about just finding a sell position that makes sense logically, where we can have minimal risk, okay, small risk, but max reward. That's what you need to think about. So it's the top, stop loss above somewhere. price gradually moves down. And on top of that, this is just from using all of these time frames together. Price continues to drop. But again, remember, if you didn't get the first trade, if you didn't get the second trade, if you're potentially getting this trade, always remember this. This is the area of significance for us. 117. We've done the analysis. Price is likely to get here, but this is an area where price may decide to bounce from, because price last time it was here, hit there and pretty much bounced off. So this is where we'd be trading to. We'd be trading to these lower kind of levels with this in mind, regardless. So if we traded from the top, let's say for example, just to do it from this way, let's say we traded from up here. We're not going to say, okay, cool, well, our stop loss is going to be down here. Not because we don't think it can go there, but because we're thinking to ourselves, okay, cool, price has pretty much full steam opportunity to get to here. And then when we get here, it becomes a question mark. Even though the market is moving down long term, price has been bouncing between these two regions. So price might actually bounce back. Price might decide to move sideways. And why am I going to let all of this potential that we've got on the table potentially go into the abyss because of some unknown potential that we don't even know? Okay. So these are the kind of things you need to think about when it comes to setting your targets, etc. So this is a third opportunity. Okay, cool. So we've talked about this on the weekend. This is the trade. Price is likely to go down. Now there's three potential opportunities we've seen where it's been good, where price is basically what we call consolidating. Price is moving sideways or not moving in the direction that the momentum is going, or not moving opposed to the momentum. When it moves sideways, this is when it gives us the opportunity, okay, to basically take the trade. Now we can get rid of this. We go back to a 15-minute. Let's go to raw time. So what happened? Price hit 117 like we had planned out for. Then what did it do? It bounced off, right? Bounced off 50, 60 pips. And what did it do next? Okay, cool. Same thing. Now we're talking about opportunity number 4. This is one currency in 1 week. Okay, guys and girls. Does this make sense as well? Let me know in the comment section. So where's the top? Okay. What do we look for? We look for multiple opposing candles. You get that right here. Okay. Out of sideways movement, sideways price action, right? Okay. Is this the top? Let's look to the left and see if we have any sort of information of where price could actually go. Okay. We can see this. Okay. As reference. Okay. Then price moves down, price comes back. What's the worst case scenario? Understand this, look. If price tops out here and drops, what's the worst? Like, all it happens is you miss the trade, that's it. If price doesn't, like if price, you just think, let's say for example, you took a trade here and you get stopped out. What's the worst that can happen? It should be less than 2%, 2% maximum, minimal risk. If price works from here, what's the best that should happen? At least 6%. That's how I do it. Okay. At least 6% plus. So when we're looking at all of this stuff, is this the top? Maybe. Price comes back. Is this the top? This is similar to right here. So we've got more opposing candles, but we've also got some previous price action in this region that gives us a good idea about, you know what, could this be the region? Drops, tries to come back, doesn't get as high. Okay. Starts to drop. Okay. This is 50. This is about 70. But bear that in mind, and price is going back down to these lower levels, right? We're going to have this in mind as well. Remember that. This is where we expect price to get to, etc. And then what happens? Price collapses through, right? To 116.40. Now we're in basically close to real time. Okay, what's actually happening right now? But if you look at all of this, what are we going to do? We're going to do the exact same thing we just did. Let's go to a lower time frame. Excuse me. Okay, we're seeing price bounce into the region. Price comes up. This was the first area I highlighted. Right here. Price comes back. Okay. We're looking at these areas. What's price doing? This was the final kind of move down before it came back up. Okay. And this is how you do it. So as we continue watching this, price is moving down. Quite uncharacteristically in a lot of ways, because the euro yen is a little bit more erratic, but price is actually gradually moving down. Again, like I said, where are we looking to? We're looking to the 117 region, because that's what our analysis from the weekend has showed to us, right? So as price continues to drop down, it goes through. This isn't a surprise either, because once it breaks through, it's not a surprise that it'll break through quite significantly. But that doesn't mean, because some people start getting carried away and saying, okay, cool, yeah, it's gonna drop. But that's like the last, like you know when you flush a toilet, it's like it just lets go of everything. That's what it's like before it kind of, okay, cool, where's the bottom where we're gonna try and push back and see if, like, how serious this downwards movement really is. So as we basically come back into this region, we're now getting into real time. What do we do again? What way is the market going? The market's still long term moving down, right? Yeah, it is. So what do we do? Let's go into real time. We do the exact same thing. Okay, cool. We now see some opposing candles. This is the first real significant set of opposing candles. And where did it top out? It topped out right here where this black line is, right? So what did I do? I put a black line on. I said, okay, cool. Is this the top? We don't know. You can look to the left. Do we see anything in that region? Or we see this last leg of the drop down in this particular region, don't we? Yeah, we do. We see a lot of this stuff that we just discussed in this particular region as well. Okay, which is, sorry, not in this region, a bit higher, basically. But the last time price was in that region, this is what it did. Does this mean it's going to do that again? We don't know. Okay, now we're in real time. But as far as we know, right now, this has been the top. Where do we know? Not for certain, but where can we logically, looking at this chart, expect price to get to if price continued to drop? Right here, right? 116.40. Why? Because the last time price dropped, this is where it dropped to before it turned around. So if you was trying to take a trade anywhere in this kind of region, you'd be looking and saying, cool, does a trade make sense going down to here if this is the bottom? And we say to ourselves in that situation, okay, cool. We're talking about, let's take this all off. We're talking about 117.15, 117.25, 117.30 in these kind of regions. We're talking about 116.40. You're talking about what, potentially 80 pips, 60, 70, 80 pips. So really, a situation like this, it all would depend on where's your stop loss, which likely would obviously be at least above the apparent top, right? That's where I'd be trying to put my stop loss at least. And then it would be the next thing would be about, okay, cool. Where's the entry? Okay. The entry here, is the entry here, is the entry here. Again, go back and watch the previous live streams over the last our last 3 previous live streams on our channel, because we talk about entry a lot, and we'll continue to talk about entry a lot as we go forward, because at the end of the day, your entry is really what determines in a lot of cases how successful your trade will be. Why? Because if I get a trade on from here, this is the risk, the logical risk. If I get a trade on from here, this is the risk. Almost the risk is doubled. If I get a trade on from here, this is the risk. Okay. Your entry will determine how much risk potential is. If I get a trade from here, this is all potential profit. If I get a trade on from here, this now becomes the potential profit. If I get a trade on from here, this now becomes the potential profit. So out of all these 3 scenarios, where am I likely? Where's the best case to get a trade on? It's further away from the target, right? Yes, because that means you get the most potential profit. Thanks Zeke Diligence for commenting and saying this makes sense. Really appreciate it. Okay. And when you think about it from that perspective, again, let's basically go down lower and see what we can see in this particular region. Okay. So let's see this. Let's make this a bit, and let's move this over. And again, one thing I'll say is, this is just analysis. This isn't, we're not market movers. We don't determine where the market's going to go. So I want you to understand, this is all potential. Until we're actually in any trades, this is all theory. Okay. So before and after, it doesn't make any, like, it doesn't make a difference if you were never in the trade. It's all theory. But one thing you need to understand is, even if you're on the sidelines, make a decision. Like, write down what you think. Do you think the market's moving down? Do you think the market's moving up? We don't know what's going to happen, but we're basically looking at this and saying, okay, cool. Like, what could potentially happen? As we look at this, what are we seeing? We're saying, okay, price peaked up here. Why did price peak up here? Is it because this was the previous high and there's most likely stops above? Or was it a little stop hunt? Maybe. But price dropped down. This is a 3-minute chart and came back in. And these are some of the candles you want to see. I talked about this last week. Okay. I talked about these 2 candles here. I talked specifically last week about what we call the shooting star. Okay, it's a common, like, candle pattern. I'm not claiming to have made it or anything like that, just for the record. This is just like common knowledge amongst the basic candlesticks. But what I was talking about last week was another potential sell position, was the beginning of this opportunity, if I remember correctly, and it was close to it. And I was talking about the shooting star candle that we saw in that particular region, and that's where you want to see it. It's good when you see it in these high up places, because it means one thing. It means 2 things. The tails on the top, these things right here, tell us that price tried to go up, but price was rejected. Okay. But because it's also at a high place, it's like, okay, cool. If it looks like the market's going down. Now, think about this. We've got one piece of insight here, which is we've got the opposing candles, right? A lot of opposing candles. That's number 1. We've got the previous high. That's number 2. We've got the potential top. That's number 3. We don't know what that's going to be. We've got a shooting star candle in the right place, basically. And I say the right place, in the kind of place you want to see it. That's number 4. Okay. And this is the second. It pushed up first. This is the second time. Okay. So it's the second opportunity second, that's five different pieces of insights that make this a viable trade opportunity. Okay. Now, price push down. This is what 117.30, 25, that kind of region. Because we did all of this stuff to basically come and look and see if this actually makes sense. Okay. So if we're looking for an opportunity somewhere in here, remember, it has to be down here, right? So the better this potentially is, okay, closer to this kind of region up here, the more likely it is. Because now we're talking about potentially, okay, cool, this much for this much. Let's do that again. This potential much for this potential much. This needs to be 1. This needs to be 3 times at least. Okay. 3 plus. Or let's say 3 to 3 plus, right? And then in this scenario, let's take this all off. And let's now look and see if it makes sense. Okay. And let's see. So this is looking like a 20, 25 pip. This is if you take the whole high. Remember, and last week on some of the live streams, I talked about how you can get a better stop loss. I'll talk about that in a moment. Okay. But all we need to see is, does this number right here go to 3? This number right here, does it go to 3? If it goes to 3, then you're potentially in business. If it doesn't, then it doesn't work out. Okay. So let's see. So we've hit the number. 3 is right here. Right here. And price obviously hit there the first time. Price obviously hit there, excuse me, the second time. Excuse me. Will price hit here a third time? This is something you will never know, okay, until after the fact. Once you're either in the trade or you're not in the trade. But this is how you just taking one currency, we're going with the long-term momentum of that opportunity and just looking for our opportunities, right, to jump on the bandwagon and to continue in that direction. This, to me, just makes the most sense in regards to trading. Now, we talked a lot about risk, okay, because again, like I mentioned last week, we talked about this. You basically use these lower time frames to kind of get these better opportunities. Just by looking at it from a 15-minute perspective, the stop loss guaranteed has to be in this particular region up here, right? But when you go down to these lower time frames, look, this is a 3-minute time frame. So every candle here on this thing, every green bar, every red bar is 3 minutes worth of trading activity, right? So in these scenarios, this is giving us more insights. So this was the potential top that we draw from a 15-minute. We've seen some opposing candles, okay? We've seen these opposing candles pushing up against what price is doing. This is the potential top. Then we see this as another potential top. Some people are jumping in here. Price is moving down. Price tops out here. Price obviously subsequently has dropped from here. But these are the things, as this is happening, you're looking at this and you're saying, okay, cool. If you're not in here, are you going to get in here? Are you going to get in here as price moves down? But the point is, if this is the top, based on the actual like minuscule price action, we're not even going down to tick charts. We're looking at a 3-minute. You can look at a 2-minute. then you potentially, now look, this is what I need you to understand. If you start taking these more micro like stop loss opportunities, you are likely to get stopped out potentially more. Because why? Your stop loss is closer, right? So it's a risk to reward game within the risk to reward game. Because if you get a trade on with a stop loss here, this distance now becomes less risk, basically. But it also means it's closer to your entry and you could actually get taken out. So if price, for example, came back in here, said, you know what, I'm just going to test it because this is a long tail, and tails generally get retested a lot of the time in a lot of cases. That's not like the farthest thing from happening. Price could easily come back up here, not hit this stop loss that would be up here, but stop someone out with a stop loss here. Okay, so you'd be stopped out and then the market move down. So you have to take that into consideration. But then at the same time, you're looking at all this stuff and it's like, okay, cool. Price might actually be saying, look, this was the top. Now this is the top. If we put our stop loss here, you'll see exactly what this actually looks like. Okay, if the stop loss is here, we're looking at this, and what happens? Okay, just by moving the stop loss in, see this number? This what it was from 3, now it's at 3.78. Now your reward has gone up because it's less risk. And these are the kind of things you have to focus on. Okay, is it worth it? Is 0.78% more profit worth this potential space not being my stop loss? If you're new to this and you're trying to implement this, like, it's funny because when I started this, I was bang on these kind of areas with the stop losses right here. I kind of learnt this backwards because I came out of trading with smaller time frames. Like this, what you can see right here, everything I've kind of explained to you, like since we've gone down all of this from a 3-minute view, all of this stuff this is kind of how I learned to trade initially, trading from the smaller time frames, basically. But the reason I came out of that is because it wasn't really like just my natural kind of character, so to speak. I like looking at candles for longer. I don't like making decisions just based off smaller time frames. This is why we do all of the higher time frame stuff first, and then when we get into this scenario, all of this stuff is just like icing on the cake. These are the kind of things. Notice what I said. We're going to use this time frame for what? For entry, right? Potentially. We're going to use it for entry. And what else are we going to use it for? There's 2 things you can use this time frame for. These kind of time frames, these lower time frames. The first one is entry. What's the second thing? The second thing would be potentially, which is linked to entry, which I just explained, is risk. This is where your risk can potentially shrink from here, from this kind of window, to a window like this. And you can see how just like 5 to 6, 7 pips, you go from a 25 pip stop loss to a 20 pip stop loss and stuff like that. And you can see how things are completely different in those scenarios. Okay, so let alone if, notice this, let's say, let me do this, let me move this backwards. Let's say, for example, look at this. Let's say, for example, you try to take a trade from here. And let's say, just for this example, this didn't happen, right? Price dropped down. Price dropped straight down to where it is right now. This will be an even smaller target. But notice, the reason I'm going to caution you from not getting too carried away with this stuff is Can you see how now we're talking about 8-10 pip stop loss? Look at what this just did. 8.58, right? But what I want you to, the reason I'm going to caution you about doing stuff like this is because, what did I say? I said in regards to the market here, this is more risky. So what do you think if you try to take a trade here would look like? It's even more risky. In an ideal setup, what you want to see happen is you want to see this up here. This is what I look for. That's what I'd call the perfect opportunity. When I can see a lot of sideways action, which in the bigger scheme of things, in a higher time frame, this is what all of this is. So you can see everything I'm doing on a higher time frame, I'm just trying to do it on a lower time frame. It's the same thing. Okay, this is what you call multiple time frame analysis. But I want to see all of this, okay, which is basically all of this right here, just on a bigger scale. But I want to see that right up here, and that's where you're going to get the perfect, what I'd call perfect, the perfect kind of opportunity. Hit a top, hit a bottom, okay, a lot of sideways action to get you into the trade. That's what I tend to do myself, okay. And when we're looking at that from that perspective, now we say, like, just be careful. This is the top here would be the most sensible risk. This would be less risky, potentially for a bit more reward. When we start getting to areas like this, now it becomes great if it works, but don't be surprised if it doesn't work. So I'd always be trying to look for stuff like this with a stop loss above here, and most likely like secondary somewhere like here. Okay, but generally on the right kind of currency, you'll see good opportunities on these particular trades. Okay, good trades on these particular different opportunities. So this is real time. The same thing. We've looked at 4 different examples of a market moving down 400 pips, and each window it provides you an opportunity. So just to recap, okay, before we move to another currency, this is what you need to focus on. If price is moving in a direction and you miss the trade, what you want to do next is you want to look for this. You want to look for the opposing candles, a big move back, because that means there's profit taken, right? Then when that's happened, what you want to now look for is the top or the bottom, depending what way the market's going. If it's a market that's moving down and it's basically the opposing candles are basically green, you're going to start looking, okay, where's the top? Because that's likely where my stop loss will go above. If the market, you think you find a top, what I would do next is I'd say, okay, cool. Where's a potential entry? Where can I enter the market and have a minimal amount of risk between my stop loss and my entry area? Next, what I'll do after that is I say, okay, cool. If I've got my entry now, if I've got my stop loss, if I've got my potential like level of importance, this is where I think price can get to like quite comfortably, but I'm not going to try and go beyond it. Does the entry to stop loss equal out to be at least 3 times less than the potential entry opportunity? If all of those things pan out, you have yourself a solid trade opportunity, in my opinion. And if we can see something like this is always going to be the best, but something like this, to be honest, it's like, this is the best. The only problem with something like this is obviously, in my opinion, a little bit less risky than this one right here. The only difference is with something like this is more like, this gives people more awareness. And when stuff like this happens, like, I'd say it can go both, it can go either way, in the sense that sometimes when it becomes so clear, like, it's not going to pan out because they know everyone's going to be watching. With something like this, only a select few, number one, will know what's going to go on, but number two, will be confident enough to actually enter off something like this, because it all looks good in like after the fact, but in real time, when you're seeing these green candles push up to the moon, like, your heart is going to be beating if you haven't been doing this for years. Even still to this day, when stuff like this happens, my heart is beating, and I'm second guessing myself. Like, oh, you know what? Like, am I sure I want to do this? Like, does this really make sense, etc. And the only thing that will save you in those scenarios is stuff like this. All of the stuff we've just discussed, a previous analysis that we did when we weren't emotional, when our heart wasn't beating fast, racing. It was when our minds were calm. We were looking at the markets when our hearts were basically beating softer, and we weren't thinking about this from an emotional perspective. Now, another thing I'll say is, which I think is really important, I didn't mention this, is if you do get a trade, because I just talked about one half of this, basically. What I was basically going to say is, we talked about 3.78, right? I believe it was like here, for example. But what this also helps you do is, which you should have noticed when I put the potential trade opportunity here, just as an example, excuse me. But what it also allows you to do is, which is also smart, don't always just think about the profits, right? Again, like what I mean by that is, like, not the profits. Don't always think about like the most profits, okay? Because at the end of the day, money that isn't banked doesn't mean anything. So although getting a better entry can take you like more profit, one thing you could also do is say, okay, cool. If I've got a better entry, I don't need to go as far. My trade doesn't need to work as hard. Now 3-1 becomes right here. When we look at it from this perspective, what are we saying now? Now we're saying, okay, cool. Same trade opportunity, same stop loss kind of area, but now all I need price to do is to come to this region. Okay. This 116, 65, 63 is much more likely to happen, and much more likely to happen a lot quicker than actually down here, right? Which is another 23, 24 pips. Now, it's not to say this bottom area isn't going to get knocked out as well. It might be. It might do it again, because we've seen it happen previously, right? Okay. But the fact of the matter is, before price gets to here, price has to go here. So this is something for you to factor into as well, okay, in regards to these opportunities. Hopefully this makes sense. But right now, that's all we do. We've picked a potential top. All you do is, if you haven't got into the market, you're waiting, okay, is price going to basically try and come back and test this area again? Maybe price does and it blows all the way through. Fine. That's why we risk more amounts of money. Maybe it doesn't. Maybe it consolidates sideways and continues moving sideways and tells us, you know what, the market's moving down. Maybe the market comes back this way and moves down. Maybe because you didn't get in these particular regions, okay, you say, okay, cool, I'm going to get in this particular region when price comes back again. But that's something for you to understand anyway in regards to the euro yen. We talked about this on previous live streams. We called the top. We talked about the where the potential bottom is. Price is basically trading around these levels right now, and it's important. And another thing I'll say in regards to analysis is, you can do your analysis, just leave it on. This is how we started the stream, where I was basically explaining. Sometimes you look at these things and it's like, okay, like, it actually looks like you came after the fact and put these things on. No, it's because you leave them on and you see what happens. And once it materializes, you ask yourself questions. Okay, why did it do this? Why did it not do this? Etc. These are the kind of things you have to think about. Let's look at another currency we talked about, because we focused on two main currencies this week in regards to trade direction. It was the euro yen and it was the euro dollar. Okay, two euro pairs. Both of them, we were basically saying they were basically moving down. Now, obviously, as you probably noticed if you was been on from earlier in the live stream, we had a yellow box on the euro yen, we had a yellow box on the euro USD. The euro yen basically hit that region before dropping down. You can see here, the euro opened up on the market, and then what did it do? It didn't even get all the way, and subsequently it's just been pushing down for most of the week. Okay, so this is why what I explained on the euro yen is even powerful. Okay, and I guess I thank God ultimately for kind of like steering me in that direction, because that whole thing we just broke down makes more sense even now about what if you missed the opportunity. Now you look for the second opportunity or the third opportunity, and we just broke down the fourth potential opportunity of the week as this market, the euro yen, has actually dropped 400 pips. Now we basically get to the euro dollar, and it's the same kind of scenario. We don't need to spend as much time on it, but the fact of the matter is, you can see 4 hours. Price didn't even wait around; it just started dropping, right? Now we can go down. Let's look at the lower time frames, 1 hour, and you can see this is a good time frame to see like the way a market is trending or not trending, etc. And we can basically see. Let's just go down straight to 15 minutes. Let's zoom out a little bit. Okay. Going back from last week, just notice how price has been moving down. Is it going down in one direction? No. What do we have? We've got opposing price action, consolidation, consolidation, consolidation. Okay. Notice down, we've got down, consolidation, down, consolidation, down, consolidation, down. These potential places here are the tipping off points where people are taking profits, where there's changeover, and it gives you the opportunity to basically get into the market. Okay, especially, or I'd say it gives me the opportunity to get into the market in these particular scenarios. So let's go down even lower. Just we can touch on this a little bit quickly. Let's see what price is doing now. In real time. So look at today so far. Let's zoom out a little bit. So far from this morning, this is what price has been doing. Pretty much from here to where price is right now. Move this over. Do this. Okay, price. This is what price has been doing. So you think about it from this perspective, and price is just gradually moving down here. And all you'd have to do is you're looking for an area. Where's price like topping out? And look, you do this now, and then tomorrow you do the exact same thing. But that's a good way to segue into something really significant, okay, which I plan to talk about just for the record. This will hopefully save some of you a bit of money, okay, for those of you who are actually actively trading. So one thing you need to understand is we've just entered a new month, right? And we talked about this on the weekend. The one thing you should know, okay, is, let's do this. The one thing you definitely should know about the markets, which I think is really actually significant, is what's happening tomorrow. Okay, there's something really significant happening tomorrow in the markets, which you should know. Every new month in regards to the trading week, we get a really big piece of information in the market. Okay, I'll show it to you really quickly right now, but this is something that you have to be aware of as a trader. Okay, if you look right here, okay, this is what we call NFP, for those of you who don't know. Non-farm payrolls. Pretty much the biggest, we'll draw a proper line. Pretty much the biggest piece of data on the scheduled calendar. And for those of you who are, let's say for example, you're not in any trades right now, I probably wouldn't advise you, especially as we get closer to the evening, to take any more trade opportunities. And what I'd advise you is wait until after this figure has been released, and then you consider basically what you're going to do in those scenarios. So on that note, I think we've kind of touched on a lot of stuff in today's live stream. Hopefully this has been beneficial to you. If you like what we've talked about, definitely hit the thumbs up. Like it, let us know that, you know what, this is something that you like us doing, you want us to do more of this stuff, you want us to break down more stuff. If you've got suggestions, you can put them in the comment section as well. And on that note, I'll see you on the next live stream or the next video, God willing, and hopefully we can continue to help you make Forex profits in the Forex markets. Until next time, safe trading, and I'll see you on the next live stream. Guys, take care.